Hello, Pro Traders. It's a new week. Quickly, let's go through the forex market, gold market, of course, and then try to identify any potential trade setup for ourselves. So, right before the chart, we are on the weekly time frame. Last 2 weeks, we were looking at this bearish candle where I did pointed out that this candle is really nothing of a grand scheme of things in terms of the bullish move that we have. So it is a candle that is actually offering an opportunity for more buyers to come into. So we did have it tap into the fair value gap here, offering a fair value in the forex market. So it is an opportunity for more buyers to come in, like we did so last week candle. The weekly candle, of course, actually closed as a bullish candle. So right now on the weekly time frame, looking at price action, you can see that price is within a range in the middle of nowhere. But let me point out that we have trails of liquidity to the downside, which is a buy side liquidity. Then we have this liquidity right there, which is a double top. So we can expect price to hunt this liquidity or to hunt the trails of liquidity down here. But in terms of probabilities, forex has to do with thinking, with probabilities. So what probability is likely to happen, right? So you can see the bullish momentum to the upside. So we do expect or we anticipate the bullish move. So therefore, we will be targeting these liquidities here, the double top here. So it follows that on lower time frame, you could find trade setup to target these highs right there. Alright, so fast forward on the daily time frame, not an interesting story, of course. For 3 good days, price has not made any significant move. So if you go down in lower time frame, 1 hour, 4 hour time frame, of course, you have price moving between range. Now it follows that within the range, we will actually expect a candle to break out from the range. Now, either way around that the candle actually breaks out from the range, we will be interested in that candle. Why are we interested in that candle? Now, that candle will be an FU candle, an institutional candle. There's a video link to more details about the institutional candle in this video description. Kindly check it out. So if we have a bearish breakout, then our candle of interest, we will expect 70%, 80% retest of that candle to the bearish side, like we did so in the video. And if it is a bullish breakout, likewise, we will expect 70%, 80% retest to the bullish side. So either way around, that price actually breaks out from this range, we will expect the retest of the candle, which of course is an FU candle, an institutional candle. Then we can continue the move to the other side. So this is a possible scenario that is likely to happen. However, in terms of probabilities, looking at price action right now, we can expect more of the bullish move than the bearish move, like we did so on the daily time frame. In all time frame, gold market is actually bullish. So looking at the trails of liquidity here, and then of course the triple top here, we can expect market to hunt the buy side liquidity and obviously continue to hunt the sell side liquidity. That is thinking in terms of probabilities, and then of course looking at what market is saying. Because we are in a bullish trend, we expect market to hunt the buy side liquidity, then we can target the sell side liquidity. Alright, so right here on the 4-hour time frame, very interesting story. Of course, we do have this bearish candle that I pointed out last week, an institutional candle. So by principles, we await for the 50% retest of 8 week. Now, coupled with that, we have the resistance zone here, triple top, of course. So we do expect price to hunt those liquidity, tap into the 50% like we anticipate with regards to the strategy, then we can have the bearish move. Now, what you should also take note is that the zone is actually against the overall trend of the gold market. So if you have price hunting these liquidities here, which is the buy side liquidity, then you have it into the zone. you should expect the zone to fill. So you can hop in, all right, but when you catch 40, 50 pips, and then you have to hop out from the trade because it is obviously against the overall trend. Now, one last thing before we call it a video, we actually anticipate a breakout from the range. So either way around, we are looking for a retest of that candle that actually breaks out from the range. But let me add that we should be more conservative when we see a bearish breakout. Why am I saying so? It is that simple. We are in a bullish trend. So if price actually breaks out from the range to the bearish side, then it could be in a form of liquidity grab. So this candle that breaks out to the bearish side could just be hunting the trails of liquidity here in order to gather momentum to make a bullish run. So let us be careful if we do have a bearish move. So that is it, bullishness all in all. However, we can expect the bearish move to also happen. Why? Because price doesn't actually move in one direction. Price will actually offer fair value in the forex market. So do the YouTube drill, subscribe to my channel for more tips and just